buried inside the IRS tax code, the exact same code that determines what you owe every April. There's a specific provision that allows your retirement savings to grow completely tax free, be assessed completely tax free, and pass to your family completely tax free. No Roth conversions, no income limits, no required withdrawal at 73 or 75, depending on your age. It's not a loophole, it's not a gray area. The IRS put it there intentionally, and it has been in the tax code for decades. And yet, the vast majority of Americans have never heard of it. Today, I'm going to show you exactly what this provision is, how it works, and how you can use it to build a retirement income that you never have to share with the IRS. I'm Carla Devereaux, a financial strategist and founder of the Devereaux Group. I work with women who are serious about building retirement income they don't have to share with the IRS. And over the years, one of the questions I get asked most often is, Carla, is there any way to actually keep more of what I've saved? And I answered, of course. And it comes directly from the IRS own rule books. Now, let me show you what I mean. The tax code nobody teaches you. Most people learn about three places to put their retirement money: 401k, 403b, or IRA, and maybe a Roth if your income qualifies. And that usually where the conversation ends. Your HR department mentions it during onboarding. Your accountant may bring it up at tax time. And that's basically about it. But the IRS tax code is thousands of pages long. And inside that code, there is a section called the Internal Revenue Code Section 7702. 7702 governs a specific type of financial contract, a life insurance contract, and it outlines exactly how that contract can be structured so that the money inside it is treated as a tax free vehicle by the IRS. That means the growth inside the contract is not taxed. The money you access from it is not taxed as income. The benefit that goes to your family when you pass is not taxed either. All three tax free. Now, this is where most people pause and say, well, wait, life insurance, really? I thought that was for death benefit. And that's exactly the gap I want to close today. Because the way most people think about life insurance is based on the most basic version of the product. What we're talking about here is a completely different vehicle, one that is specifically designed and funded to function as a tax advantage retirement savings structure. Now, here is what makes this different from everything else you've probably been told about savings for retiring. And this is part that usually surprises people the most. Under IRC 7702, when a life insurance contract is structured and funded correctly, the cash value inside that policy grows based on market performance. But with a critical difference from just investing in the market yourself, there's a floor, meaning in a bad market year, your account value doesn't go down. You do not participate in the losses. Your floor is typically zero. Zero is the hero. So the worst outcome in the down market is that you don't grow in that year. You don't lose, and in a good market year, you do capture gains up to a cap set by the insurance carrier. So you get the upside participation with the downside protection. Your money can grow, but it can't go backwards. So let me give you a specific example. We recently structured one of these policies for a 45-year-old client. By strategically funding it over the next 15 years, she is projected to receive $65,000 a year in tax free income starting at 65 for the rest of her life. And here's the part that matters most for retirement income. When you're ready to access the money in retirement or even before, you do it through what's called policy loans. You're borrowing against your own policy cash value. Because it's structured as a loan and not a withdrawal, the IRS doesn't count it as taxable income. You do not report it on your tax returns. It doesn't trigger IRMA surcharges on your Medicare. It does not push you into a higher tax bracket. It does not count towards the income threshold that affects your Social Security taxation. You simply access your money and keep all of it. And unlike 401ks, your traditional IRAs, there are no RMDs, no required minimum distribution. The government cannot force you to start pulling money out at 73, or if you're born after 1960, 75. You access it on your timetable in the amount that makes sense for your life. So, if this is real, and it is, why don't more people know about it? Well, a few reasons. First, it's not taught in school. Nobody sits you down at 25 and explain IRC 7702. You learn what your employer offers and you work with that. Second, most financial advisors are licensed to sell securities, stocks, mutual funds, 401k products. Life insurance strategies are not always in their toolkit. It's not that they're hiding it from you, it may just be outside of what they specialize in. And third, the phrase life insurance carries a lot of preconceived notions. People hear it and immediately think of either a term policy that expires or a whole life policy that their grandmother had. The index strategy that I'm talking about is fundamentally different from both of these, and it requires education and understanding. Most people tune it out before they hear the full picture. None of that means that this strategy is wrong for you. It just means that you have to proactively seek it out. Now, I want to be clear about this. The strategy is not a fit for every person in every situation. The structure has to be set up correctly. The funding has to be handled right. If it's not done properly, the tax advantages can be compromised. This is why working with someone who actually specializes in this matter, not someone who knows a little about it, but someone who builds this specific structure every day. But the first step is just understanding that it exists, that the IRS allows it, that it has been there the whole time, because you cannot use a tool you don't know about. If this is the first time you've heard about this, I made another video that connects directly to this one. It walks through how some retirees are building retirement incomes where they owe zero, literally zero, in federal income taxes every year, legally, without anything complicated. Click the video right here to watch the next. It picks up exactly where this one leaves off and shows you the exact math behind the strategy. And if you're ready to stop guessing and start building a tax-free retirement plan tailored to your specific numbers, click the link in the description right now to book a free session with me directly. Let's run the numbers and see exactly what is possible. See you on the next video.